Let's start just with brief introductions, just so that everybody knows who everybody is. Amandine, let's start with you.
I'm Amandine Joulie. I'm a partner at the TaylorWessing office and specialize in real estate.
Great. Guillaume.
Hi everyone, my name is Guillaume. I'm a managing partner at FARO Capital Partners, a real estate boutique, mostly focusing in France and Western Europe.
Super. Serge.
Hello everyone, I'm Serge Bacconnier. I work at the Paris office of Bacconnier, a commercial real estate mortgage lending bank. I've joined 6 years ago, worked in a French bank before that, and very happy to be here to have this discussion.
Great. Gwendal.
Gwendal Kalkofen, Europa. I joined last year in December, working and overlooking the treasury side of the business. The business is a pan-European fund manager focusing on core and value-add opportunities.
Great. Alfred.
My name is Alfred Fink. I'm a partner in TaylorWessing in Paris. I'm a German trained lawyer, being now for 30 years in Paris, so having become a French lawyer. So we're having a lot of cross-border transactions in Paris, doing for foreigners coming in, or the Parisians going out. So that's a little bit my bit.
Great. Let's maybe kick off just with some sort of overall market kind of views in terms of sentiment. Serge, maybe just with you, I mean, obviously we're seeing transactions stuck in a lot of places across Europe, obviously because of what we've seen over the last, 12 months. What are you seeing at the moment in terms of transactions, but also, I guess, investor intentions in the French market?
So maybe what is interesting right now is, given the global environment we are in, with higher interest rates, inflation, uncertainties in the economy, we have two aspects. First is on new transactions. Clearly, there is a drop in transactions on the side of investors, and therefore also for us less transactions to look at. Typically on the office sectors, pretty much a standstill period. We see some investors shifting to some other asset classes, maybe but with less volumes, like life science. I think the residential sector is picking up a lot. There's a lot of interest for managed residentials also. So for us, it's focusing for new transactions on well-located. As usual, there is a flight to quality, and we are now mainly focusing on very good transactions, not taking too much risk elsewhere, and very much concentrated on Paris area for offices. And the other aspect is keeping very close to, in this period, keeping very close to our clients, meaning that for some of them we have some financing which are arriving at maturity, financings from 2017, 2018, 5 years, and so we have to manage this transition period where those investors maybe don't want to sell their assets because of the repricing that has to occur. And they are in waiting mode. So sometimes they are asking for 2 years extensions or refinancings, and we have to keep close to those clients because the challenges are big. Sometimes they have to put some equity in deals. We have to manage the covenants, etc.
Okay, good. And Guillaume, let's pick up with you as well. What's your sort of overall sentiment at the moment in terms of the market?
No, obviously I joined my friend here. Maybe just I was willing to add that the tone is a bit. Sorry for the noise. The tone is a bit more optimistic. Where I would say the last 2 quarters we haven't seen a lot of deals to underwrite, mainly to the reason that Serge explained. Over the last, I would say, 3 weeks, there's deals coming in from the agent, from an off-market perspective, and even I would say, if we don't have the new kind of price tags on the market for prime, for value add, etc., there's transaction going on, and everyone is kind of anticipating the new repricing. So as of now, I would say the tone is optimistic, would be really ambitious. But the tone is really better versus the conversation that we all had at MIPIM or even worse at Expo over the last summer. So the equity is here, the debt is here, as Serge mentioned. The assets are coming back in the market with obviously a repricing, that's for sure. But we still have to see some volume coming in to really, I would say, turn the page from the last 2-3 quarters where activity has been really low.
Okay, good. And Amandine, does that reflect in what you're seeing on the ground there as well in terms of, I guess, interest from clients, and how much of is that international?
Yeah, we have. I agree with the two parties.
We're all agreeing. We're going to have to stop that.
Everything has been prepared.
We still have clients active in the logistics side on the last mile kilometer, which develops in all over France. I would say in Paris there are lots of value-add issue on that sector, and also they invest in other cities like Lyon or Marseille or. So this sector keeps to be active.
Okay, good. And Gwendal, obviously you're also then looking at, as Europa, you're looking at across Europe and with different capital types. So I guess, how do you see the French market at the moment within that perspective?
I think it's probably fair to say that France was probably one of the last ones to come out of the blocks in terms of yield widening. But has caught up quite quickly, in particular, as Serge and Guillaume were saying, that now you start seeing more transaction on the market. The interesting element will be to see whether vendors and buyers can actually meet, because we have not yet clearly heard from the ECB whether rates have plateaued. And that will obviously take into consideration any discussion when it comes to the final purchase price. I think we in France, as we are also in other countries in Europe, are active on the core side as well as on the value add side. I think on the core side, the difficulty is to find deals which stack up, just given quite plainly where interest rates are, and the yields are not necessarily reflective, so it does not necessarily work as such. On the value add side, we are concluding on several last mile developments, VFA developments in France, where we do see appetite in the market. At the same time, it is being very prudent, because there's a segregation in the market taking place on the liquidity side, and particularly on the debt side, whether it's regional or whether that is very centrally located. In particular, when focusing on larger transactions above 100 million, but equally for transactions which are more used for portfolio build-up strategies, so assets of 25 million, 30 million. Their banks, especially regional banks, are still a little bit hesitant, in particular for non-French domiciled investors. So it'll be very interesting to see over the next coming months how that market, in particular the liquidity, will behave.
Okay, good. I'm going to come on to the debt side in a minute. Alfred, what are you seeing in terms of, often, Paris particularly has been very much kind of a home for international capital from the US, from Asia, from the Middle East. What are you seeing at the moment? Are you seeing still that kind of demand from the institutional capital, or has that changed a little bit? Is it more local investors in the market? What's the position?
No, I think what I see from my desk nowadays is that a lot of US investors are coming in with private equity firms who have collected a lot of money, trying to place the money into the market, and they're looking for very large deals, because they are not looking for something below 100 million. And there are not a lot of these kinds of transactions currently on the market, or portfolios who match exactly this expectation. So what we see, what they are doing quite often, coming in, if there's a lack of financing for new products, that they come in with financing for developers. So that they come in via structures from London, via Luxembourg, into the French market, in order to finance new projects, so that they are very close to the new projects straight up from the beginning. So it's either really construction financing they're providing, or, as we say in French law, a VFA contract, where they are becoming owners from day one and financing over the course of a construction period everything which is going on. So that's something we see quite often, particularly US. Very recently I got calls from South Korea. So they have also made up their mind that South Korean capital from institutional investors is coming back. There's, for example, there's a joint venture between one of the big French banks, and one of the big South Korean banks also. They are now looking into France for huge portfolios. What I would like to mention, hearing my colleagues talking about the market, is that we were very active in the hospitality side. That is something where we have hotels which were still on sale. We closed over the last 6 months perhaps 2 hotel transactions. So where we are selling one and buying one, and then we are now in one where we should buy, but the financing is not in place. So a little bit problematic. So everything which people are talking about operational real estate is certainly a little bit in demand, particularly looking at private equity people who are used also to take an operational risk on the asset and not only investing to have a rent. And in this respect, I think we see a little bit kind of a move in the market, that is a new kind of investor or mindset of investors. That's something which is important for my understanding. And I think to give you my view of the market is, yes, we are now coming into the market again with assets because everybody has waited the valuation by the end of the year. First discussions with the bank, and now they know what they have to do. And very importantly, we saw that the SCPI, which is an open-ended fund, last week made the first, I'd say, publication saying that their shares will be traded with 8% minus. So you can now pay shares from an open-ended fund with a discount, which was something never ever we have seen in the French market before. So I think people become realistic, and the values are going down. So I think the discussions will start now again, and there might be also people on the institutional side to loading off a few of their assets within the next couple of months.
And I'd be interested to get other people's views on this as well. But do you think that then we're going to see, if there's that finance gap, refinancing is coming up, does that mean we will get big opportunities coming into the market at discounted pricing, or will the market kind of extend a little bit in order to make that less of a problem? How do you see that? Will we have distress there?
Well, let's put it this way: we have 2 or 3 files onto the desk where we are just struggling to discuss with the banks. Exactly the point also, which was already mentioned a little bit earlier by Serge. How do you do that if you have a refinancing which was financed by 1.2%, and now you're coming in saying, well, we like you, we are working with you for the last 20 years, but the interest rate should be at least 3.8, 3.9, 4%. And I remember when the Californian bank was going into insolvency, a few banks were saying, well, we have to put another layer of 25 basis points on top of it as a risk margin for us. So it's difficult to get into a contract with a huge increase in interest rate, and then saying, what do you do with the interest coverage ratio? So you are immediately out of that. You should convince them that they perhaps put a little bit more equity on that. So all this kind of discussions you will have with the lenders, and it's tough. It's difficult for both sides, I suspect.
Yeah, maybe picking up on that, there is the interest rate. Obviously, is one of the topics. The other topic is maybe deals at that time were at 60% leverage, and with the repricing, the new valuations, it's also a matter of discussing with our clients to eventually put some equity. I think the positive aspect in France is that usually we try to find a solution. We are here to be close to our clients and to go through this period. Sometimes it doesn't work, so there are some files already in Paris where topics have arisen. But generally speaking, I think it's more a way to find a solution, whereas in the Anglo-Saxon world, things crystallize much quicker. So in a way, it's positive. In another way, the market moves maybe slowly.
And does that mean there's going to be more kind of alternative lenders coming into the picture to try to fill that gap, or are there still going to be some issues there?
I think there are alternative lenders who have come to the market and who are trying to seize opportunities. The problem is at which pricing, because when you have interest rates at a level Euribor plus 7, 8, or even more if you go higher in the leverage. It doesn't necessarily work. So.
Yeah. Maybe just to add to this point, it's with the cost of debt now, if you're looking for a high leverage, it doesn't make any sense to add the layers of mezzanine or to go through a loan for through I would say an alternative debt provider, if that's a proper word, because at the end of the day, potentially your equity within your BP will cost you less. So you have to do the math. But what's really interesting also is the real estate investment business is not a rocket science. It's really easy. You buy that to distribute for most of the funds. At the end of the day, it's, you invest and what you give back. And I think we really need to wait for the hierarchy of the pricing between the prime towards, I would say, the more riskier situation. As of now, we just need to see where the prime yields are in order, I would say, to kind of reposition every kind of strategy. And as of now, it's more, I would say, some kind of maverick deals from here to there. And as you were mentioning, the big core buyers could be the French one and the German, and even some, I would say, Middle Eastern funds that have been kind of setting the pace towards the kind of bottom yield. They're nowhere to be seen, and the deals, those kind of deals, are happening right now. So I think in the next 1, 2, 3 months, we will have a clear tag on, okay, this is a new prime yield. So core is at this level, maybe at 4%, maybe at 4.5, I don't know. I'm not saying anything. So, so entering for a proper core plus or value add, this will be, kind of the threshold we need to have in order to make our money work.
Just to add to the cost of debt, I think we also need to keep in mind in Europe, interest rates were negative. The yields as a consequence were significantly lower if we're just on a like-for-like basis, and I'm averaging here. I'm not necessarily comparing a bond street yield with something in Paris, but if you look just at the prime yield for Paris, you look at the cost of debt plus the margins. Now, that's one element. If you just talk about senior debt, you're trying to insert some rescue mezz, which cost probably another 7-8%. You also need to factor in that there is also mortgage registration costs in France. That's another factor which very quickly from a mathematical point of view, if we just you may as well sell at some point. So it's just a matter of time until the market digests that, and over the next 6 to 12 months probably will move in a direction where there's going to be more clarity.
But I think what's also interesting is that there is an opportunity to get in with assets which need a refinancing that are very often also the occasions where people are coming in to do a joint venture with the owner nowadays to provide the equity, but as joint venture partner, not only as an equity provider, as a lender. And that's something we see quite often in buildings which need also a little bit of refurbishment. So there you get a very small equity stake and do the financing of the refurbishment of the building entirely. And so the exposure is different, and you can have in your joint venture agreement something which is covering your situation as investor, and the bank is fine with it because they see that you are improving the asset. So it's not something that they say we are losing out on it. There's a new person with a deep pockets coming in, doing some equity investment, but taking also over part of the refurbishment work. So I think we have to be a little bit more, inventive about the investment you can take in to get into the market. But that is certainly a way to do it in a very smart way. And I remember that we were in one transaction where the asset was nearly not up to date, and there was only an equity investor coming in saying, well, I take over the entire investment cost for the renovation, and the bank was happy with it, keeping more or less for the 2 or 3 years it would take on the same level the interest rate, more or less, because they say, well, we're getting an asset which will have a higher price at the end of the day. You will reposition it, we get a different rent. So the profile of the transaction looked completely different. So I think that's the way I look at it. You must be perhaps a little bit more inventive about the way you do the investment into the French market to get a stick into it. So it's not the plain vanilla, I buy something, I sell something. It's becoming more structured and more working together more perhaps taking operational risk on the asset. So that's the way I think the market is moving, at least for the time being. It might be in 2 quarters or 3 quarters we are back to normal, but for the time being I see some people from the outside doing inroads into the French market this way.
Okay, good. I'm going to come to the sectors in a minute, but I wanted to just approach it a little bit through, because you're talking there about refurbishment and you know some of the issues with financing. Amandine, looking at you know ESG and particularly the carbon neutrality issues, is that influencing the sectors differently? I mean, I was at Transport Logistics yesterday in Munich running a session there, and again, that was one of the major topics for people, both in terms of their transportation, but also particularly for the real estate part of their business. So I guess it would be interesting just to see how much of a topic that is, how many of, you know, how much of an issue is it for Paris, where obviously, like London, there's a lot of old buildings, and you know you've got La Défense, which was, you know, a lot of that was built some while ago, but obviously demand is for something that is high ESG criteria.
It's a major issue in France, but I think in all over the world it's a real issue. There is a transitional period between when the law is issued and how we apply it to a building. So, for example, the décret tertiaire, which obliged the consumption of energy to lower from up to 50%, was issued in 2015, and we are. We are really talking about these issues when we are dealing with the leases on the investment sides, the cost of works. So yes, it's and this this ESG issue covers all over the assets. So on the residential side, now if you are a class G or F on your performance, you can't let your flat. And so we will have these kind of issues in all over the assets. So I think that's a core and main issue currently, and which is taken into account by the developers, investors in each transaction.
Serge,
maybe just picking up on this topic, it's I think we are living a great period because the real estate is really in a changing mode, and all main players, all actors are taking the subject very seriously, and have to, because the regulator is there also to push for that. I think one of the big challenges, given the environment we are in, the challenge is how quickly we can implement that, because I mean, when the market is a little bit stuck, it has been in the last 2 quarters. Obviously, it's difficult for players to invest or to buy assets and invest in capex. And maybe on one point you mentioned, Alfred, you were mentioning the value creation with all the capex that is being done in some assets. I think sometimes the view we can have is also maybe not to lose value, because some assets are just not marketable anymore, and sometimes the investor will have a view that putting I don't know how much capex in it will maybe not create so much value, but just maintain the value as it is today. So that's also part of the elements that made these last quarters difficult, because when an investor was looking at an asset, it had to encounter all the capex required to put it at market or to
And does that mean we're likely to see, or at least attempts at, you know, change of use from office into residential, from office into, you know, more of a mixed use residential hotel, whatever it may be? Is that how those assets will be brought back to the market, and then that's got to be some opportunistic money coming in?
Yeah, I think there are initiatives in there. We have been in contact with some investors who are looking at converting office assets with no use or not being lettable anymore, and trying to see how to convert them in residential where the demand is still very high in Paris or in the first ring, for instance. The issue is how to get the authorization to convert into residential, because mayors don't really want to lose the office, the mixity of office, residential, retail in the area. So
it's a political issue. I would say it's also a political issue from the mayor. I mean, it's not only
urban zoning is a decision through the city hall mayor. So basically, each city can have a say on their urban zoning, and whatever they're doing, even if it's crappy. Sitting in Palais de l'Élysée, you can't do anything versus that. And maybe just to add on one point, and I should have said that at the beginning of the session, but some of you may know, but today EY is issuing the European Attractiveness report. And I think for the first time in the history of that report, France is number one, and I had to kind of open my eyes like widely just to be sure I was reading what I was reading. Like, come on, who has paid this report? It's Emmanuel Macron or something. None of it has been done properly. And the interesting things is, sometimes it's good to have a left-wing people, I would say, at the top of the tree, but the two main themes of having France, I would say, on the top of the podium was, one, innovation, which, I thought innovation was basically more in London or in Germany, but apparently, more people have been innovating in France over the last, I would say, 1 year and a half, 1 year. And second is the approach towards, so what you were all mentioning, towards sustainability. And those guys have been put in place, really hard regulation and how I would say more sustainable the construction has to be, etc. And we're kind of ahead of the EU taxonomy. And a lot of investors sees, I would say, those implementation as a plus versus other countries where, they've been more struggling to get into application those kind of green measures. So I will encourage, all of you to read that report. I have no position within EY or anything, but it's really interesting to see how, obviously, with what has happened in Germany on the energy crisis thing, and in the UK for all the reason we know, obviously that has helped. But it's really interesting to see, despite all the turmoil and all what you see on the news, basically behind the curtains, some people are really working in France.
We're deliberately avoiding talking about the UK at the moment.
Quick mention.
And Gwendal, would be good to get,
I think
because here you would have a lot of sense of, people will be concerned because there's rioting in Paris and therefore people are going to be looking at it negatively rather than taking Guillaume's point there that there's a positive take on it.
No, I think ESG is generally a topic everyone, not only Europa, has been focused on for a number of years. I think that the difficulty which the equity investment side has is, from a mathematical point of view, from a bank's perspective, it's relatively easy. The capital you're required to hold back for a green loan is different than it is for a brown loan. On the equity side, there are not enough evidence yet what is a green yield versus what is a brown yield. What is the green ERV versus a prime ERV? Until there is more evidence, that will kind of also slow down the acceleration of that trend. I think it's undeniable that the market will move in that direction, just partially because more and more banks are publicly stating that they're transitioning their balance sheet to a fully green balance sheet. And if you do not transition, the risk is that you have a stranded and illiquid asset. So that we know, but it's the element of what is my yield if I have BREEAM very good versus a BREEAM excellent. No one at the moment in the market can tell.
Maybe part of the answer to this point is if you look at a brown building, maybe not very centrally located, you might have some issues in terms of liquidity, selling it in the future. If you look at a Parisian CBD Haussmannian building, which obviously will be difficult to turn fully green, either banks or investors.
We're doing it together.
Yeah, we continue to finance those kind of assets even though they are not green. So that's maybe part of the answer. And I guess in terms of liquidity on the market, it doesn't change that much, even though there will be improvements done on these assets also. And maybe, it's ESG is really a topic that banks have also taken very seriously. We have a specific process, ESG scoring, as other banks have implemented. This goes through our pre-committee, committee, etc. So it's really taken by all the actors on the market, and now it's starting to be homogenized. Banks are talking together, valuers also, to have a scoring grid, etc. So,
and are they scoring? Because obviously, one would assume the Houseman buildings, should their embodied carbon, should by now have be in their favour.
So only one short comment there. If my recollection is correct, the German central bank is even looking into that for each bank, if they are green or not green. Otherwise, they will get a second layer of own funds which they have to put into place. So it's simply something. It's not only that you're doing it because you think it's the right thing to do. There's a regulator who's coming in and telling you if you don't do it, it costs you money. So it's something which is quite interesting to see.
No, good. I wanted to pick up a bit on the sectors. Just in terms of the office, what do we see there? Because the last time I was having these kinds of discussions, there was a growing kind of bifurcation in the market where you'd got great assets that everybody wanted and assets that nobody wanted. What's the kind of situation at the moment for anybody? Anybody can pick that up.
Yeah, I think it has polarized even more.
Okay.
There is really, we were speaking, I think last time, from flight to quality. I think it's still there, and obviously we are financing very well located assets and with the green topics on top of that. In terms of in the office sector, I think the volumes are really low now. We are seeing some transactions, but for smaller deals. And maybe investors are trying to diversify a little bit on other asset classes like life science, but the volumes are less, so it doesn't enable investors to invest all their money. So one big push is maybe for residential. We have financed managed residential development last year, for instance. So that there's still there is will to encourage this type of projects. So I would say residential, office when the projects are good. And logistics also is, I would say, is picking up. I think that the repricing has started a little bit earlier, so maybe there are more transactions on the logistics sector.
I think the difficulty is that you are really different micro markets in Paris also. I think if you are within the city railway, so the périphérique, everything which is within that is normally highly priced. 8th arrondissement, where all the banks are, where the law firms are, all the investors are. We are paying 1,200 euros per square meter per year, which is for Parisian standards quite high. And everything is outside, so that doesn't mean in the suburbs of Paris. That's something where you start to think about, should I move there? La Défense is at 340, 360 euros per square meter. You see already the gap. It's five subway stations away, or 6, but you have a price gap from 1,200 to 380. So only to show you what's going on the market, and that has ramifications on the price, on the attractivity to buy or invest into this kind of assets. And then what we were talking about in the suburbs, having an old office building which needs refurbishment. Well, they are really no longer on the market anymore. You will not be able to rent it once again, and that is the way where you have this resource about how can I reactivate the building. But that's not only a question of money, because as we heard, it's political, and even if we have a scarce situation about residential, that the mayors of the suburbs will not accept to have another 100 families over there, because that doesn't mean they have to invest in infrastructure. They have to invest in schools and so forth. So they will not allow you to switch the utilization of the building from office into residential. So that is also a political question, not only a money question. And I think that's something to be taken into consideration. Nowadays, it's very difficult to convince them to do something in a smart way, because they say, well, that costs money on two sides. It will decrease my budget because the office is no longer there, and it will increase my budget of investment. So in this situation, it's difficult to get the change operated.
If you were to exclude La Défense, the vacancy rate in Paris is extremely low, and there's also limited supply. If you go back almost 3 years ago and you compare La Défense then to now, where the ERVs are, it's again very different. And back then, because the ERVs and La Défense, irrespective of the lease incentives which were granted, that pushed a lot of occupiers to the suburbs, whether it's Clichy or even further. Then you had the element of the Grand Paris Express, which came to that as well. When you certainly start witnessing, and that's not just only Paris, that's partially also key regional cities in France, but also outside France, it's a refocusing on the locations, because this is generally where you can attract talent, where the occupancy rates are the highest, and also from a liquidity point of view, when you want to sell an asset, it's also the most liquid.
I think that's a real trend to have new talented people. They want to work in Paris, so it gives prime real estate in Paris remains prime. Even
the only thing what we have seen is that the uptake of office space has decreased a little bit, at least in the first quarter or the last quarter of last year. So the big transfers, like more than 500 square meters, which have been rented, have decreased. I think there were only 6 transactions this year, and last year, the same period of time, it was 16. So everything which you can see coming in by, home office versus getting into the office has, I would not say come to a standstill, but at least the big transactions have been done last year, and this year we will not expect the same number of transactions. And what you see is that that's the reason why we have a kind of a contraction in the office market in Paris, is that the people came from the outside into Paris looking for 2,000 square meters, because that was the management and the back office was left behind. So it's something where you had these people picking up 2,500 square meters, and I know what I'm talking about. We're trying to move out of our office into a new one, 2,500 square meters. If somebody has an office over in Paris, we are happy to look at that. Want to get also.
It's under contract.
So simply to see that there was a change, but this change has, led to a situation where you have only increased the price and no new projects, due also to the fact that you have the Olympics. So new projects will not come on the ground before the Olympics have been done. So that doesn't mean there are new building permits, whatever, for Paris in the inner city, because we would like to have a very nice looking city. So there will not be a crane somewhere standing. So that doesn't mean, I think, transaction or new projects will not be allowed nowadays until the Olympics have passed. So that's also a point to take into consideration.
No, this is very true. And maybe to come back to your very question, which was the investments. I think, as you were mentioning, there was on the core side. Obviously, there's less. No one is willing to take the risk to put a beautiful asset on the market. Where basically most of them in their writing, they were expecting to sell it around maybe 2.5, 2.75% yield. 2 years ago, or now, where you're facing the market, could it be 3, 3.5, 4%? I don't know. Maybe there's like 4 buyers that can buy this, so it's really risky. But on the other end, like you were mentioning, on the value add side was beautiful location, and where obviously you can, I would say, challenge the urban zoning people, which is not always so obvious. Just for example, there's a building in the center of Paris in Le Marais, historical. The building is nice, but it's not so wow. There will be a little bit of capex. I think 40 offers were received. 40 offers, in this kind of market, it's crazy. On the other hand, on core product that are being in the market, there will be maybe 2, 3 offers, and because due to the size and due to the pricing, it's like, it's different here because you have different sources of core capital. But in Paris, basically, you have the French, you have the Germans, and potential some 2, 3 exotic that are kind of walking by. But at the end of the day, this is as little as you can get. So a lot of appetite for value add, less for core. And for Core Plus, it's so we're the same. It's mainly driven by the financing. So as now the cost of debt is higher, it's hard to flip some nice cash and cash through the debt. So it's still a market to be found.
Okay, good. I wanted to pick up a little bit on retail because there have been kind of growing views in some of the discussions and interviews that we've been having that slightly more risk in office because of work to home, maybe less so in Paris perhaps. Particularly also those discussions coming from the US where we're seeing huge amounts of issues with that. But because retail in a way is priced in and e-commerce was on a trajectory, then obviously had to go right up because of COVID and is now sort of heading back down to its normal trajectory. That retail is sort of understood, the risks are understood, and so therefore potentially people beginning to look more favourably at that again. Is that true in the French market, or what's the perception?
I think we also need to distinguish between luxury retail and then the retail which is a common, I wouldn't say common, but so what the rest of the population is using on a day.
You mean people like me, Gwendal?
Exactly, like us, right? So certainly what we do see is a rise of retail parks, the development of retail parks across France. We do see a partial conversion of some city centre located shopping centres where you've got change of use in the upper floors, you maintain the ground floor. But at the same time, French also love the click and collect angle rather than just only online shopping. So as a consequence, the retail in every country, retail behaves slightly differently. In the southern countries, retail behaves fundamentally different to the northern countries or the UK. So in a nutshell, we certainly, from a Europe perspective, are very favourable when it comes to retail and the fundamentals. Partially also when you look at some countries, not necessarily France, retail has gone through a very challenging time over the last 5, 6, 7 years. Yields have not always adjusted. Rental income has been readdressed in a way that rents have been rebased and also diversified. So there is certainly a resilience in that market which has an attractiveness from an investment opportunity point of view. And we do see debt or participants in the debt market to actually slowly come back in.
Okay.
Because they have over the years reduced their retail exposure and are looking to reallocate certain parts of their balance sheet.
And luxury for sure in the Paris market seems to be an enduring kind of attractive asset. I mean, we haven't seen much drop in that at all, have we, I don't think?
No, I think if you look at the high street, luxurious high street, the triangle d'or, as we say, the golden triangular, there's everything that is taken up, which is doing very well. And I think also that Gucci was doing one of the big transactions. What you're seeing is, in the luxurious market, that they try, due to the fact that they have made huge amounts of money, that they would like to buy the asset, no longer rent it. So in the luxurious markets, you have a trend that the occupier would like to buy it because they have made huge amount of money. Vianage is buying everything they can get.
It's like a monopoly. Maybe you've seen in the headline. It's a war between two billionaires basically that are trying to get every single piece of Paris, from the Champs-Élysées Golden Triangle to the center of Paris. And those guys, it's completely open, so they're buying anything they can, whatever the building is, not only retail. And the power they have towards city hall is amazing. They can change urban zoning like that because they basically own the city. Those guys are, the fat cats sitting close to the mayor, and when they buy a building, they can change the use, they can do whatever they want because they're doing so well and they can do everything. But maybe also coming back to the high-end in general. In France, the resi, the hospitality, as you were mentioning, and the high-end retail is going up the roof. It's crazy. The tourists are back in, 1, Americans, 2, Asians, and 3, I would say, the rest of Europe's. But when you walk now on the street of Paris, or on the South Riviera, and even some more remote, I would say, high-end place in France, it's crazy the traction you can get on the resi, on the hospitality. for example, the pricing in central Paris for residential is going off the roof, mainly driven by Americans and Asians. And those guys are, I would say, they're buying in a day. So basically they're coming and they're buying 2-3 flats for the family, maybe for money protection or just for, coming there maybe once a year. And this also is pushing on the hospitality, on the high-end resi, on the high-end luxury as well. And this is some kind of behavior we haven't seen obviously over the last 4 or 5 years, and it's really amazing what's happening in this segment.
I think you have also to take into consideration that even a flat in Paris compared to Shanghai isn't even cheap. So I think it's also that you have to take into consideration that other parts of the world are earning money at levels which are not used to in Europe. So that if they come in and they say, well, it's a bargain price, I'm in Paris, central Paris, I'm paying 20,000, 25,000 euros a square meter. I would pay 40, 50 in Shanghai. So that's something you see also coming in. And so far, I think that's something we have to take into consideration. But apart from luxurious assets, I think where I am a little bit thinking about more feet on the ground, there is also retail where everybody was going. And then you have now everywhere the interdiction to go there by car. So you will not pick up your stuff in front of the retail shop, but you have to carry it a long way around, or you have to find somebody to take it to your home. And I think what I see, certain areas in Paris where the shops are closing down and will not be reopened again. And particularly these things which are a little bit larger you have to buy, you will find afterwards outside of Paris in a kind of a shopping mall where you then have to go to get your curtains and you have to go to this and that, and that was beforehand in the city center. So there's a kind of a change of the entire setup in the city center. You find more French fries and kebab and things like that for the tourists than this kind of more catering, shops for the families, to my understanding. And I think that's a complete change, and that's not only due to the fact that there has been a change in the attitude to buy, but it's also about the urban decision not to have cars anymore in the city. And so far, that's quite interesting to see that is interrelated. And in so far, interesting to see.
And just briefly on the sort of more alternatives, you mentioned life sciences already, Serge, there, but data centers, but also senior living, student, those kinds of aspects. Has anybody got a view on any of those?
Personally, I think that is certainly something where people are now looking more into. This kind of operational real estate. That's something people...
The depth is limited. I mean, senior housing, there's been a scandal a little bit in France and some part of Europe of the managers that, when you read what was really happening over there in terms of management compared to the price that the tenants, if we could call them like this, were paying, it's critical. So no one wants to put a finger into this. Basically, the French sovereign fund put some money into it, maybe to come a little bit. Student housing is going pretty well, but same issue as for the resi. Getting a building permit is really hard, especially if you want to transform some obsolete building into student housing. It's not so easy, and it's hard to do some kind of repeat business on this end. And for life science, this is a new kind of darling for investors, but it really doesn't exist. You have to build it, and most of the time end users do it. And I've been visiting some life science assets. Most of the times, to protect the intelligence that is in there, etc., the research, it's really hard to penetrate all the premises. And at the end of the day, they don't want to sell because they don't want to potentially. Usually, you invest in your investors' money, and behind that, they don't know really whose that is. So it's really limited, I would say, as of now. And but maybe touching to a new kind of investment. What we've seen is unit per unit sale into resi is being really hard now for all the reason we know, the financing for the people, etc. So we see most investors trying to get discount on some operation from the developers. Buying block buying 2-3 operations at a 20 to 25, 30% discount, because as of now, selling directly to unit per unit is really a challenge. More than I think it was 40% of the loans were refused to individuals. So it's really hard. So. I think block resi buying could be something where most investors are going to go and then potentially leasing to different tenants.
The resi is a complicated market because you have also preemption of the mayor, and they do preempt the real estate assets. So that's a really
when they have
a portfolio. Yeah, but no, they buy and they give to a buyer social.
Yeah, social housing.
And on the just on the senior real estate side. These kind of assets have been restructured on the past years. So, on the corporate side. So, I think now for me it's a kind of mature market, and now it's just about, operating issues, because the OPA issue it's an operating issue. It's not a real estate issue.
Yeah, but it's a global issue when you look at how the operators were behaving towards, I would say, the tenancy they were to properly manage. It's everyone has tagged one or two brands, but basically the way it has been done has not been, I would say, so proper, unless from some establishments.
On the operating side, it was proper.
But the risk is the operating. Usually you buy a lease with an operator, so at the end of the day, if your operator is badly dark, you're at risk indirectly.
Yes.
But I think personally that's something, at least look at the markets. The baby boomers coming to the market now, which are 60, 65 years, 70 years old, which are in good health. They are not looking at something where you will only be catered sitting in your room the entire day. They would like to have a massage in the morning. They would like to go to whatever kind of sports activity in the morning. There should be a swimming pool in the afternoon. They would like to have a lesson in English or French or Italian, whatever kind of language. So this has to change. And I think that is something which we at least see from time to time changing. And if we talk about operational real estate, it's effectively the buyer of the building who steps in and says to the operator, hey guy, you have not to do that this way, you should do that completely different. And we will control you. So they take a part of the control of the operator, which is quite new. And I think also co-living for seniors is something which is coming up. So, which is also kind of a new set where nobody has really got already everything settled in a way to say we have 3 people, 5 people sharing an apartment with a big kitchen and a big living room, and everybody has a room of 25, 30 square meters for himself to have some privacy. All these kind of things are at least in a move for me nowadays, because it's not yet settled, but there's something which is happening. And I think this area is certainly something which will move very fast in the next couple of years.
Yeah, one of the things we're involved in as well is the Senior Housing and Healthcare Association, which is focused on the real estate aspect of that, and a link between the operators and the investors. And that's, for sure there's a big growth in that aspect. Does anyone have any questions that they want to bring, or any thoughts that they've got? I want to pick up a little bit just for 2 minutes on the location side, but if anybody's got one, let me know.
Maybe just on the diversification, it's from the bank's perspective, it's probably easier to finance a residential with an operator when the operator is good. We have done that last year because there is so high demand. Like typically PBSA assets, this type of products work well when they are very well located. When we look at other type of diversification like data center or life science, it remains a very new product for the market in France. Data center exists, but it's very granular. I think there is not so much volume, and it's a very specific product. Could be also an infrastructure financing instead of a real estate, so there's a mix. So it's a little bit more difficult to apprehend.
And you have the ESG challenge for the data centers as well.
And the life science, it's the same. There are not so many products. It's difficult to find a location because you have to be close to research centers, etc. So I don't think there are so many products on the market to find. We have been asked for some financing on this type of product. Viewed from Germany, it's difficult to go on this type of market in France where it's not so deep and liquid. So remains very granular.
Okay, good. Because we have to finish exactly at 10, I'm going to wrap this up with one quick question, which is to everybody, which is where do you see the biggest opportunity? And also, we've talked mainly about Paris. So, is there also an opportunity outside of Paris? So, you can have best opportunity and a mention of anywhere outside of Paris where you think it is worth people looking. Amandine, let's start with you.
Yes, I think there is life out of Paris. No, but especially for hospitality and leisure, I think there is great opportunities to have out of Paris. I would say there is two major sectors is, I would say, residential and logistics, and specifically last mile kilometers, because I think that's the last mile kilometer is the next boom on the real estate side. Until the office will come back, I think we have work on that side.
Okay, great. Yeah.
Outside of Paris, absolutely. High-end resi and high-end hospitality are the top. I would say I would be going to look for. Most probably on the French Riviera, obviously, because this is where the traction is. But the pricing over there in terms of resi or hospitality is still increasing, and it's really fascinating. It's like, there's no limit to it.
I'll go there after my luxury shopping.
By now.
Yeah. Serge.
I hope one of the big topic which will be picking up is the office sector coming back. The big challenge is ESG. So I think one of the hot topics for the years to come is to work on value-add core plus deals to improve the assets, the office assets on the ESG topics. So I hope to see fights on this in the future.
Great, Gwendal.
I'll probably pick up on what Serge was saying. I think I'd be focusing, albeit that's more my private view rather than Europa's view. I'll probably be focusing on the absolute core location, La Défense, or along Champs-Élysées, partially picking up on luxury, where the owners of the brands are looking to buy the building itself. If you're lucky enough and can pick up certain assets which were 2-3 years ago levered at 60% bullet and are finding themselves now in a rather more difficult situation, then this certainly is something which is attractive.
Great, Alfred.
Frankly speaking, I don't know what so
He's still looking for some new premises.
he's looking for premises in Paris. Yes. No, I think certainly what everybody has already said. Looking also on my desk, I see that hospitality is certainly something which is picking up. Personally, I think everything which is co-living, student housing, residential, that's something which is certainly in the upturn because we get more and more people into the city centers. So that's something which is going up. Offices, I think they have not yet found their way back into the market because we are seeing that a lot of people are saying we have to get back face to face. We can't do it only between Teams and Zoom or whatever. So there's also the factor that a number of people are socially isolated if they stay only at home. So doing everything between Zoom and their fridge is something which is complicated at the end of the day if they don't have a social life around their apartment. So I think there are also issues coming up, and I think that needs to be a little bit more redefined, and I don't see how that works. We are too rigid in Paris saying 2 or 3 days a week, not as it may be sensible, reasonable to do, because there's something you can do always around the week. I think we as lawyers, we are used to do work already at home from time to time, but it's not that I do it on a Monday, on a Friday, on a Wednesday. It makes sense, I do it or I don't do it. And I think this flexibility should come in with a sensible approach to that. So
maybe just a gel on this one, because it's really important what Alfred is saying, notably in the work from home in France. You have to bear in mind that we're in the middle of Europe, but we're still very Latin. So before COVID, there were no work from home, because basically work from home, from a manager's point of view, was, he's going to stay at his place and he's going to watch TV or whatever he's going to do. So there was no work from home. But really, no one even the employees were not considering, maybe some, but very few were considering to work from home. So we came from a position where Northern Europe or the US, they were used to that. They knew how to work from home. They had the tools, but basically everyone was locked down, and some of them didn't have any laptops on, no emails on their phones, etc. So we came from a situation where everyone was at the office from, okay, you're gonna have like 2-3 days per week of work from home, but to adapt, it's like, talking to your kids, say, no, you won't go to a club. And then, okay, you can go like all the time to the club. And you're like, wow. It's so much freedom. And I think it's a bit coming back, because as you were mentioning, it's really interesting. The people were so happy to have the Mondays in their countryside house, to have the Fridays, and sometimes also the Tuesdays. But now, and we had that discussion yesterday at dinner, I was discussing with someone who's also in the real estate industry, and they're a subsidiary from a French bank, and they have 3 days per week of work from home. And they say it's horrible, because obviously on Monday, Tuesday, no one, Friday, no one, Wednesday, Thursday, I don't know who's in, who's not really in. We have to travel also, so at the end of the day, we lost complete communication in between the teams. So I think now a lot of companies are, trying to step back, especially in France, saying, well, it's not in our behavior, in our attitude to work like this, maybe especially for the young people, 3 days per week at home. 20 years ago, I would have just committed suicide. It's horrible. In 10 square meters, a 9 square meter flat.
It goes back to what Amandine was saying for offices, is the importance of attracting new talents. So I think that's one of the big issue or big challenge for the years to come, is how do you manage home office versus attracting talents and getting them to know the company and work with other colleagues. And going with this, the big challenge for the office sector is how you adapt the office space. What are people expecting when they come to the office? Finding slots where people meet at the same time, etc. So these are all the big questionings around the office sector right now.
Very good. We are over our time. Thank you very much, everybody. Thank you for being here.